Hi, everybody. Brian Ullman at Ford Financial Group. And I wanted to take this opportunity to go through a sample statement for everybody. Our statements changed in design about a year ago. And while they are good statements in comparison to some other investment firms out there, they come from LPL Financial, who we partner with to manage your investments. And so they're better than some of the other firms perhaps that are out there, but still they're statements that have to do with finances. And so almost by their nature, they're going to be fairly difficult to read. So I just wanted to take a couple of minutes to roll through a sample statement with you so you can see some of the main points here. Now, all of it is important. So I'm just going to highlight a few things and try and explain a couple of items that are sometimes the real source of confusion. And so let's go ahead and dig in really quickly. I'm going to get my writing tool here. What you'll see here is this is a quarterly statement. So many of you receive monthly and quarterly statements. So the end of the fourth quarter statement is something that you probably received in early January of this year, and it's going to summarize the entire year, although all of the quarterly statements are roughly the same. And so you will see this up here at the top. It says fourth quarter, in this case, 2018 statement. Up here for us, you will see Ford Financial Group, but in this case, there's a generic investment firm here. And what you'll see, what I'd like to point out to you here first, and on the beginning page, you're going to see this is a summary of all of your accounts combined, or it should be at the very least. If it's not, I would suggest that you get in contact with us so we can make that fix for you. But we have 5 accounts here in this sample, and in combination, the values change. And I think this is one of the biggest areas that have changed. What you'll see here is that we have, for this end of year statement, you'll have what the value was at the beginning of that calendar year, the value at the beginning of the prior month, and then the value at the end of the month that the statement is for. And in this case, the end of the year as well. So you'll see for this person, they had 9.922 million to begin the year. As of the end of November 30th, they had 9.939, almost 4 million. And then on the end of December 31st, it was 9.98 million. And so what you can see is down here is the change and the net change. Some of this coming from growth and probably some contributions here in this case. But there's some other things going on here as well. And let's look down to the bottom half of this statement. The way I describe this to everybody is that there are only really 5 things that can go on over the course of a period that you're going to get the statement. You have your starting value. You're either going to add money, you're going to take money out, you're going to receive interest or dividends, you're going to have fees, or you may have fees that period, and then the value of the investments will go up or down. That's 5. Those are the only 5 things that can happen over the course of a statement period. And so let's take some of the mystery out here. We're going to look right down here to these 2 columns. Well, let's look at the fourth quarter first. Here you had a starting value of, in the case of this account summary, $935,000. There was no money added in the fourth quarter. There was no money taken out in the fourth quarter. They received $23,000 in dividends, interest, and capital gains here. And then there was a $3,000 fee for that period. And then the value of the investments grew $5,000. So if you take that and you mash it together, that's a total change of $25,000. And you go from $935,000 to $960,000 at the end of the period. That is just for the fourth quarter in this statement. What you'll see is that there's a second column here that shows year to date. And in this case, it's the entire year here. So so in the case of the fourth quarter, the starting value is the beginning of the fourth quarter, which is October 1st. For the year to date, or for the entire year summary, you've got the starting value as of January 1st of that year. And so they added $2,000 here, $40,000 in dividends, $12,000 in fees, and an increase of value of the investments of $8,000. You add that all together, that's how you get a $38,000 gain and the ending value right down here. So that you're going to get probably your most important amount of information, really the key stuff on this first page, which is starting values and ending values, and those 5 things that go on in between the starting date and the ending date, which is additions, withdrawals or subtractions, dividends, interest, and capital gains, fees and expenses, and then an increase or a decrease in the market value. Now, of course, that changes every month, every quarter. So this is going to change pretty frequently. But this is the key. You are going to glean the most important probably information on the front page of your statement, whether it's a monthly statement or a quarterly statement. I'm going to move down here just briefly. You'll see in some of these other statements also, there are asset allocations here, and there's also line items. You'll see these don't, because this is a sample, these values don't necessarily add up. You'll see right here. These don't tally here. But what you can see here is that there are 5 accounts, and they are on page 2, itemed line by line. And you'll also see the asset allocation down here, where you can see your overall mix of stocks, bonds, mutual funds, and ETFs, annuities, and so on. So that's on page 2. I don't want to say less important, but just a little bit different. Here's where some confusion comes. What we were looking at previously was a cover page. If you dig a little bit deeper and get down into the statement, you're going to see what looks like the same statement as before, but in fact, it's not. This is actually now breaking out one of the 5 accounts that were listed previously. And so you're still doing the same thing that we were doing before, which is to have a starting value, those 5 things go on in between, and then you have an ending value. But in this case, it's broken out into each separate individual account. So let's just say you have an IRA, your spouse has an IRA, maybe one of the 2 of you has a Roth, and then you have a joint account or a trust account. That's 4 accounts for your household. In that first page, you're going to see all of those accounts combined together. And then in successive pages, each of those gets broken out in its own report. And so that's the other thing I wanted to point out here. And because it's sometimes a source of confusion, because the statements look the same, but it's important to look up here and see which of these accounts are we talking about. Oftentimes, the first page is the consolidated summary of all of the accounts together, and then in successive pages, it's broken out differently. So I hope that provides a little bit of help in reading your statements. Of course, you can always give us a call. We love, especially with new clients, sitting down and reviewing statements so you can read them. But it's not just for new clients. We do this often and from time to time with existing clients, even people who have been here for some time, particularly because these new statements here, well, they're new. They're new statements. And so they look different than the landscape kind of statements that we've had here produced by LPL for so long. I think these are more readable, but sometimes new things take some getting used to, and we're happy to help you with that. If you need more information on this, you can email us at our general inbox at info@forwardfg.com. Our firm's contact information is on the website at forwardfg.com. I hope this has been helpful. My name is Brian Ullman. I look forward to talking to you in the next one.